evening all. Ira Epstein of Linn Associates with your metal market wrap-up for this Wednesday, June 23rd, 2021, about 5:50 p.m. Central Time. We had a great, and this was a great What's Up live webinar today. It moved fast. We had the questions in ahead of time. I had the charts ready, and I made a decision that Wednesdays will be the official day for this. I'll open it at 12:15. You have to register. You bring your questions. It was about 18 minutes long today, just perfect. So took the fourth one, and now we're there. So unless I find a reason that I'm personally busy and can't do it at that time, mark that down on your calendar, but you do need to register each time you're going to come in. So, in the marketplace, what have we got? Well, the stock market's still acting well, and obviously the NASDAQ has been the stellar performer here. It's sort of keeping the other indices up. In the energies, we're still higher. Even with tonight, one of the assistants to the current president of Iran saying, oh, the U.S. has agreed to all the terms and they're going to remove the sanctions and allow the Iranian oil to flow. Okay, we're not hearing any of that at home, are we? And I haven't heard from them what they're giving. So propaganda, yes, but where there's smoke, there's generally a little fire. Bonds and notes, pretty stable here. Janet Yellen talking about today in front of a Senate committee that while the inflation number at 5% is there, she doesn't expect it to last at all. She thinks it'll get back down to 2%. The Feds go very quickly. This is transitory, and put the Senate on notice. They better do something about the budget and the debt that the Treasury has, and lift the limits that they have. Otherwise, they don't want to see a default, do they? So you got a lot of politics going on. Metal markets down. Copper, what a stellar performer today, up roughly 10 cents. You can see most of the currencies just hanging here. So we are now in the post. A week ago Fed announcement. The market's had a week to digest it. It's been a rough week. It's been back and forth, certain sectors getting hit. There's another element tomorrow that takes place after the close, and it could affect metals and other markets. The Fed will release the bank stress tests and potentially free up billions of dollars where the banks can go out and buy back shares and increase dividends. So that'll be very interesting. As for gold, it's still doing what I said to you. We had that move up. We fell back to the 18-week average of closes. It is very similar to when the market moved down through here, got under, came back up, and then down. And you do these little tests. Well, reverse it. It's the other way. You're looking to see if you can get the bullish move. What will hurt the market, and I pointed this out to you last time, is being under at the end of the week this close right here of 1767.70. Now we're not there at this point in time, but you're not far from it either. You're at 1782.30. When I take a look at the chart, you can see there's a congestion pattern that has developed right here. The market still has the pattern of lower highs, lower lows. That is bearish. Now you're getting even closer to where the 18-day average of closes is going to get under the 200. I don't see how it doesn't do it. Even when you drop some of these numbers back here, these are so low, they're just going to smash that average through it. There's no magic. This doesn't get the same play as the 50 and 200 day, but it's still an important average where you get another bearish crossover. As for the resistance, I think we've been nailing it as I'm talking here, that when you got over the lower Bollinger Band, the 100-day average would be the immediate resistance, and if it can clear that, maybe it eventually gets back up there. And if the market takes out 1761.20, I don't know where it's going for the next move, but it's much lower. When you look at the slow stochastics, they're very oversold. They are not embedded. Even though both numbers tonight are under 20, you don't count tonight. So you start with yesterday, which is Wednesday's close. Then you get to Tuesday and you don't have it on Monday. Could you embed as of tomorrow? You betcha. And you've got to pay attention to that, because that would be another bearish part to the market. When you lose the embedded reading, the idea would be you'd get a good rally out of the market. But when you embed, you don't fight it. You generally go with it because it's a very strong signal. The gold-silver ratio, you're just hanging at this 18-day average. Look at how quiet it has gotten. Just sort of sitting here, not telling us much of a story. As I said, the market is fighting now in the silver, and you can see the fight. The fight began at the, well, first it failed, really, here. You made one attempt, you paused for a moment at the 100-day average after you got under the Bollinger Band, and you're getting a breakout of the sideways action. You follow through it, and when you follow through with it and you look at where the market closed, you now have a downside breakout. You got both this settlement and this one in the lower part of the day's ranges. Then the market's going to start fighting at the 200-day and to get back inside the Bollinger Band. The day after that, falls back a little, and now you're still staying at the 200-day, and that's exactly what you're doing. This is your battleground, and you can see it crystal clear. It is the 200-day average. You're very oversold. If the market rallies from here, then the 100-day becomes it. Is there anything friendly on this chart? Absolutely nothing, other than the fact it's not in a trend just yet. It's got a higher high, lower low. These vertical price drops, you don't try to catch a falling knife. You know that? You're going to get hurt. In copper, copper did a very good job of rejecting staying under the Bollinger Band. It was oversold, getting a bounce. At this point in time, I can make an argument that maybe we get back into the 441.75 as resistance, support back at 424 and a quarter roughly, and sort of stuck in these two areas right now. In the platinum market, we still have the higher high, lower low, and just like silver, not in a trend. That vertical break off the FOMC and the shock that the market had with the Fed was going to be talking about tapering. The palladium, where do you think the first resistance should come in? The 100-day average of closes. Next one would be the 18. You stepped out of the Bollinger Band and moved right back into it. Dollar index, you were 3 days in a row over that band, and that causes the correction. And now as the market isn't open yet, but I'm waiting. Remember what I told you yesterday? Yesterday, the market had and created the embedded reading. You had at the close of business yesterday both numbers over 80. Come on. Over 80 the day before and the day before. I also pointed out that when you close right near the day's low and you're barely sitting here with a reading of 80.62, you don't do anything. You don't react on that. Let the market get a little bit of trading in, and if it's lower, you're probably going to lose that embedded reading. And if you do lose it, what it often leads to is a test of the closest main moving average. It lost it today. When can it get it back? It's a two-part sword. If the market were to have a strong day tomorrow, you'll get back over that, and if you get it back, you're back to the embedded reading, looking then for the upper Bollinger Band. So in plain English, you still could have a target up here of 92.32.5, but without a strong performance day tomorrow, the odds strongly favor that instead of that, you fall back into the 91.08 category. In Ethereum, we had finally a bounce away from having 3 days under the lower Bollinger Band earlier. Now we bounced out of it, and tonight we're just sort of sitting here. I don't look at that as a change, and people are all over the place. Oh, well, that was it. You didn't drop any further in Bitcoin and so on. The bears still have control of that market at this point. This was a bounce and not much more than that. You know, one of the things that I hear from people that are subscribers to my morning research is this. Ira, I wake up in the morning, instead of me having to read all over, I take one look. I know the news of the day. You start that off. You're giving me an idea of the reports coming out, if something's going on in Asia or Europe, what to be looking at. And then you're walking me right through the charts. It's like, boom. I'm up on the markets within 15 minutes in the morning, and that is the goal that I have. It's beyond bringing you up on the markets with the charts, the ideas for trading, and that's what a lot of them say. Yes, they love the charts. I get people that love the news with it, but they all seem to love one thing. The time I put it out gives them an idea of what's going on, and a lot of people that trade the combo packages with us, in other words, both the spiders and the other, they love how they follow each other. Why not give yourself a try on this? For $7.95, what you're going to get is for 30 days, not a month, it's 30 days, 6 videos a week, each about 20 minutes long. The weekend ones come out either Saturday or Sunday, depending on how I feel in the summer. And they will cover just weekly charts for the longer term trader. And on the daily charts, the ones that I do Monday through Friday for you, I also bring in sometimes the weekly chart, trying to show you what's going on. And on the weekend, I flip around to some dailies, looking for signals that make sense and verifying, are they that way on both charts? How do you find out about it? $7.95. It's $156 if you want to take it for the whole year. That is the best deal. So how do you go about this? Just go to our website at www.iraepstein.com, and when you get into the website, just go up to the word research. I'm Ira Epstein. You have a great day, and I'll see you tomorrow.